It's a busy day on Wall Street, so let's get right to the three things you need to know as the clock hits 9 a.m. Mixed action in futures today. Investors playing the waiting game. Of course, they're waiting for the Federal Reserve's policy decision and future guidance as well this afternoon. The Fed widely expected to hike rates for the fourth time in a row.
And earnings parade on Wall Street. Chipmaker AMD is rising on an earnings beat, but the company issued a gloomy outlook for the quarter and warned of weakening consumer demand.
And Airbnb shares are falling this morning. The company had its best quarter in its history, but said things will slow down in the holiday season. The company citing impacts from the strong dollar and shifting consumer behavior. We'll break down that report very shortly. But we have to begin today with our top story. The Federal Reserve is expected to continue its fight against inflation and boost interest rates by 75 basis points later today for the fourth time in a row. For more on the Fed and what's ahead, let's bring in Yahoo Finance Fed correspondent Jen Schonberger. Jen, this morning we got some hot ADP job numbers that comes on the heels of, I would say, a hot JOLTS report yesterday. Clearly, this puts some pressure on the Federal Reserve.
Good morning, Brian. Absolutely. I am here live from the Federal Reserve in Washington, where in this building behind me, Fed officials are commencing a second day of their two-day policy meeting where they are widely expected to raise their short-term benchmark interest rate by another 0.75 of a percentage point when they conclude at 2 p.m. this afternoon. Though it will be what Fed Chair Powell says during his press conference about the pace of future rate hikes that markets will be most attuned to. With inflation continuing to trend toward multi-decade highs, officials are expected to raise that Fed funds rate to a new range of 3.75 to 4% from the current range of 3 to 3.25. Now, the Fed has raised rates by 3 full percentage points already this year, and another 75 basis point rate hike would mark the fourth in a row since June, an unprecedented move since the Fed explicitly started targeting the Fed funds rate back in the late 1980s. Now, if they do proceed with that 75 basis point rate hike, it would mean that the Fed funds rate is back to a level not seen since December 2007. And while the Fed likely to pull another jumbo rate hike today, investors largely expect that the Fed will signal that it will slow the pace of future rate hikes, that is, reduce the size of future rate hikes at forthcoming meetings. Though while the pace may slow, that may not have a bearing on how high the Fed funds rate could go. Right now, the Fed expected to raise the Fed funds rate to nearly 4.5% by December, though markets pricing in the chance, 50% chance, that rates could go as high as 4.5 to 4.75 by the end of this year, according to the CME. Of course, all of this hinges on the data and how hot inflation comes in. We will get more guidance from Fed Chair Powell when he holds his press conference at 2:30 this afternoon. Ryan?
Yeah, I'm going to take it, Jen, getting a lot of questions, I'm sure, in that press conference on that future rate path of policy changes, right? I imagine that's where most of the questions are going to be centered here. In the past, the chair has sometimes muddled the message, right, in those press conferences. So I'm curious what you expect from the presser and whether there are going to be other things perhaps that people are going to be asking about as well.
Yeah, hey, Julie. So I think that, as you said, a lot of attention going to be paid to the pace of future rate hikes. I don't think that Fed Chair Powell is going to commit to anything specific here because it's really going to hinge on the data. So one question I think looms is we're going to get another CPI report next week. If that comes in hot, does that mean that another 75 basis point rate hike is still on the table as opposed to slowing down to perhaps 50 basis points as many in the markets are sort of gunning for here? So that's a major question du jour. And just basically, how is the Fed viewing inflation now? As Brian mentioned, we had that hot JOLTS report. The labor market clearly holding up here, even though there have been some signs of cooling, it's still remaining tight. So really getting an understanding of how the Fed is viewing inflation now and how that ties in with the pace of rate hikes and how high they could go on the Fed funds rate is what we'll all be attuned to this afternoon.
Yahoo Finance's own Jen Schonberger. They're outside of the Fed. We got a lot of big news that's going to be coming through today. We appreciate you really setting the scene for us, Jen. We'll check back in later on.